So, good morning or good afternoon, and welcome everyone to today's session, Network Tokenization Q&A, answers to your most pressing questions. My name is Melisande Mouwal, publisher of the papers, and I'm thrilled to be co-hosting today's discussion in partnership with IXOPAY. And thank you so much for tuning in. And it's fantastic to see so many of you joining us today, and your interest highlights just how important and timely this topic is for the payment industry. Earlier this year, we hosted a webinar with IXOPAY titled "The Truth About Network Tokens, Are They Worth the Hype?" The response was overwhelming, with so many insightful questions pouring in. And it was clear that there is a strong interest in understanding not just what tokenization is, but also how it works, how it can be leveraged, and how it drives efficiency and security in payments. So that's why we are back on this follow-up Q&A session, specifically designed to address those key questions and provide deeper insights. We've gathered a panel of industry experts from IXOPAY to break down the complexities of network tokenization and share practical insights for deployment. So during this session, we'll dive into the most pressing questions, including how to effectively use network tokens and universal tokens, the real costs and benefits of network tokenization, understanding token requester ID and network portability, and the readiness of issuers and acquirers, and how that might differ across regions. And this time, we have reserved more time for audience questions. So make sure to drop your thoughts in the Q&A panel. We will cover as many as possible. So joining me today are three key subject matter experts in these fields from IXOPAY. It's GC McCracken, he's Senior Solution Architect, Kyle Cook, Principal Product Manager, and Andrew Sogran, he's Product Marketing Lead. So they are here to share their expertise and help us unpack these critical topics. I'm thrilled to have them here, and I know they are excited to answer your questions. But before Kyle, Andrew, and GC introduce themselves, just a few notes about timing and logistics. The discussion will take approximately 35 minutes, followed by 25 minutes of Q&A. And on the right side of your screen, you find the chat panel, which includes a Q&A widget. Feel free to submit your questions anytime throughout the discussion. We will take as many as possible. We've also enabled subtitles in multiple languages, including English, Spanish, Italian, German, French, and Portuguese. Just click the CC icon on the top right of the screen to activate them. So, GC, Kyle, and Andrew, it's great to have you here. How are you today? Excited?
Doing good.
Great.
Yeah, great, Melisande. Thanks for having us on today.
Yeah, I'm really happy that you were willing to do this second session on network tokenization. As I mentioned, there were so many questions. We really thought it's important to follow up on that initial webinar. So I'm really excited to have you here. To get us started, could you each share a bit about your background, your role at IXOPAY, and what drives your passion for this topic of network tokenization? Kyle, would you like to go first?
Absolutely. As noted, Kyle Cook, Principal Product Manager here at IXOPAY. In product, our goal is to stay ahead of the needs and wants and desires of our merchants. What do they need to be successful in their endeavors? And as a payments orchestration platform, network tokenization falls square in that house. You know, it's our job to understand the ins and outs of it and be present to answer questions as we are doing today. So as noted, while we are the subject matter experts, you guys are actually the stars of the show today. So put in your questions, and the more questions, more engagement we get, the more that you guys will get out of this.
Super, thank you. Andrew.
Yeah, hi, good afternoon, good morning, everybody. Andrew Sogran, you're looking at the product marketing department at IXOPAY here. And let's see. Why I love doing topics like this is I'm sure everybody's seen just headline marketing about acceptance rate lift and cost reduction and all these wonderful benefits of network tokens. And what I love about sessions like this is that we can look through those claims to see kind of where those pockets of value exist and really how to put to work this really interesting and valuable component of payments here in the best way possible for your firm while understanding all the potential benefits and what might be required of you to put them to work. Thanks.
Great. Thank you so much, Andrew. GC.
Hi, everyone. JC McCracken. I'm part of the solutions architecture team here at IXOPAY. I've been here for about 4 years. I'm also an internal security assessor with PCI DSS, so I always try to stay up to date with the goings on and security needs. As a solutions architect, one of my main goals is to work with merchants. And a lot of times I'm talking with merchants who have strategies and ideas for their business and how they can grow it. And they're usually trying to connect how they can use this technology, more specifically network tokenization. So I'm usually there to try to help consult, show them how to test and implement those solutions here at IXOPAY. So it's pretty exciting to talk about network tokens because they've been on the up and up the last couple of years. And so it's always fascinating to see them being implemented in the real world.
Yeah, thank you, GC. And for the audience, again, don't be shy. I mean, I've seen already some questions popping in, amazing, because GC, Kyle, and Andrew are just here to answer your questions. So make sure, and we made sure that there's more time for the Q&A this time around. So let me start with the agenda. What are we going to discuss today? We'll first unpack the network tokens, like what it is, what are the different components. We'll discuss network tokens versus universal tokens, and we'll address some questions that were received on using both network tokens and universal tokens, the cost and benefits, the TRIDs and network portability, and the readiness of issuers and acquirers. But before we start, we would like to know from you, so let's launch a poll question, because in this session, what topics would you like more clarity on? Is that network tokenization and portability? Is that understanding the benefits, like what's the uplift? Are these failover strategies when tokens aren't issued or transactions fall, or others? And if it's others, please share your suggestions in the Q&A widget. We just want to make sure that we make this session as useful as possible. Andrew, I know you talk with a lot of your customers, you talk to a lot of merchants. What do you expect, or what type of questions, or where do you believe more clarity is needed?
A few answers to that question. The first is where do I start in terms of the networks, in terms of where in my payment ecosystems, if I have a vault with, potentially a million payment credentials in it, should I just provision network tokens for everything available? Is there a way to sort of carve out a segment of my payment systems to start working with, whether that's geographically, whether that's for recurring payments or cards on file? So I think where I really am interested to go today is turning the benefits that I hear and the nuances into actionable steps and what I might take away from this meeting to put them to work for my business.
Yeah, great. Let's look what the audience sees as topics that needs most clarity. It's interesting. Network tokenization and portability tops the ranks, followed by the benefits, to your point, Andrew, like understanding like what is the ROI and where to start, failover strategies, and well, we received also some questions in the Q&A. So thank you for this. Carl, let's kick off just with some basics. Can you explain to us the concept of network tokens? And I will, thank you.
Absolutely. Let's get started with an overview, and let's meet on what I like to call the bridge of understanding. And I want to reiterate, like this panel here, you guys have asking these questions. Don't feel like you have a filter. Feel free to throw it against the wall and see what sticks. The three of us specialize in different aspects of the merchant experience. You got Andrew, he's going to be able to speak from how we communicate to the market, which would interpret to you how you can communicate to the market. I'm here for you to understand use case and value. And JC, he's here to help you understand how you can implement things and the implications of how you implement things. So no guardrails, feel free, throw it against the wall. Now let's get to the topic. Network tokenization, right? So let's first make sure we're clear. We're here to talk about payment tokenization. So starting with that root word of payment, we're starting with a financial pan. And that financial pan needs security, and it needs to be transmitted throughout the funnel in order for a payment to be executed. And a merchant has multiple different options in how they're going to obtain this tokenization. And there's different aspects and different values on the different opportunities for tokenization. When we talk about network tokenization, this is specific to a merchant leveraging card brands, Visas, MasterCards, Discovers of the world, to be their token provider and allowing them to interject within the payment flow, take the financial pan, and give the merchant back a network token. Now, this network token functions as a merchant pan, meaning it is merchant specific. That merchant, that network token that a single merchant has cannot be leveraged by another merchant like a financial pan can. So it's really important to understand the limitations that come with the different tokenization options that are out there and the impact down the funnel. So when you think about network, when you think about universal tokenization and offering by us here at IXOPAY, this is something that will provide PCI compliance support. This will alleviate some of the security concerns, but it's not going to keep the tokenization throughout end to end of that payment funnel. So there's different flavors, there's different ways of tokenization, and there's different avenues for you to obtain that tokenization. And that's what really matters, not just understanding the value that you're looking for, but the experience that you're looking for. So are you a multi-processor merchant where you have a multi-PSP setup? If so, you're going to want to look into what we call portable network tokens that can be used across different PSPs, different gateways, different acquirers. And in doing that, how you obtain your network token matters, right? So that's me talking from the experience, making sure we're setting the stage. We're talking about payment transactions. We're talking about securing these payment transactions and the different ways of doing so. One of those being network tokens, getting a token provisioned by the card scheme. And JC, maybe you can add a little more color about the building blocks, like how these tokens are created.
Yeah, absolutely. So network tokens are actually generated by, first, you need to provide a credit card number to the card brands. So to do that, one implication that all merchants should be thinking about is PCI scope, right? And typically we use a tokenization provider, whether that's a gateway, a PSP, or a token service provider like IXOPAY, to reduce that PCI scope. So the question now becomes, well, how do I now take advantage of network tokens? Well, typically it requires someone to act as a bridge, and that's where IXOPAY comes into play. What we do is we build API bridges to the card brands to provide network tokens on behalf of our merchants. Another name for that, when you connect and make that bridge on behalf of another merchant, it's called an OBTR, on behalf of token requester. So that might be important to look up. That's what IXOPAY is. So combining those two, we're still reducing that PCI scope so you can take advantage of those benefits as well as the benefits of network tokenization as well.
GC, I just wanted to take one question from the audience that is sort of related to this. Kyle just mentioned that there's different forms of tokens, but what key KPIs for network tokens should I look at or request from my PSP when all they provide is just the cost on the invoice?
Great question. So I think it's because, if I was a PSP, I'm probably more concerned with my own environment and my own business model, and maybe not necessarily thinking about a merchant's business model. A merchant's business model, which is something that I'm usually working with day in, day out, is very important for me to decide whether I think there would be benefits. One of the key benefits of a network token is you get higher acceptance rates. More specifically, you get a shift in 10 basis points, and they're very great when it comes to recurring payments, such as subscription. So one thing to think about is, what is your business model? Do you have subscription payments? If so, then I would absolutely think that would be a major KPI for network tokenization. Now, that doesn't mean that you have to have subscriptions in order to take advantage. Actually, any kind of recurring or returning cardholder within your system would be a great benefit for network tokenization. So what I would say is, looking at your business model, looking at the uplift, the higher authorization rates, and the shift in those 10 basis points for Visa transactions, if you start doing the math of whether or not you fit within that mold, then I would highly suggest you have great KPIs that suggest you should be using network tokens. And that's a very high level way to explain it. There's obviously some more KPIs as well.
Yeah,
Please.
I would second that. And in my opening statement, we're talking about understanding the value, the different options that are before you. So I would look at network tokens the same as any other endeavor in life. Someone is trying to sell you something. You need to be aware of what value you're trying to get from that, no matter what it is. Whether we're talking about network tokens or a life event like buying a car, you don't just go buy it. What are you going to do with said asset? What are you trying to get back from that? Are you looking to get the interchange rates? Do you have fraud problems and you're looking to increase your fraud security? What is it that you are after that you're trying to obtain as value? That's where you start. Those are the building blocks for the KPIs that you're looking for.
Great, thank you. Let's move on to the next topic, which is the difference between a universal token and a network token. GC, can you explain what is the difference and to what extent can you use them both?
Yeah, great question. I'll start with a universal token. So universal token is something that IXOPAY or a third-party token service provider would provide. The point of a universal token is to essentially decouple a merchant from being dependent on a gateway. If we think about a traditional gateway business model, is they create tokenization to reduce PCI scope for merchants, and then they provide services. Well, in order to do that, that means you also need to be dependent on that ecosystem. So what a universal tokenization provider is trying to do is to let you pick and choose the different or multiple PSP strategies or gateway strategies that you might want to take advantage of, whether that's local acquiring or whether you've ran analytics and KPIs on where you should be sending authorizations versus recurring payments, right? When using a universal token, it makes that possible because a universal token is allowed to essentially flow to any PSP that you'd like. So think of the universal token as proprietary to a specific token provider. The network token, on the other hand, the purpose of a network token isn't to reduce PCI scope for a merchant, which I sort of mentioned before. The point of a network token is to protect the card brands and the rails between the card brands and the issuing banks and the acquiring banks. And historically, when using a universal token or a gateway token, once it's left the merchant and then from the merchant onto the acquirer and the acquirer onto the gateway, right? Once it leaves the merchant, there's actually a raw credit card within the flow, within the ecosystem. The network token is different. After it leaves the merchant, there's still a network token in the flow to the acquirer. After it leaves the acquirer, there's still a network token onto the card brand. And then only then does it get detokenized to communicate between the card brand and the issuer between the actual raw pan. So they're decreasing the amount of vectors that a would-be hacker would be able to access a credit card throughout the entire flow, right? So I think that's something that is important for people to remember of why we even have network tokens. It's to protect this ecosystem, and the card brands are, I would say, they're encouraging merchants to use that by offering, a shift in basis points for interchange and things of that nature.
And I would add on to that, when you think about universal tokens versus network tokens, going back to the value, the use case, what you're going to be doing, what you're trying to obtain from that experience, the universal token is going to provide simplification. It's going to provide flexibility. If you need to see things in a certain way, that universal token is customizable to the way it can be presented to you. You want it alphanumeric, you want it in a certain format, where the network token doesn't come with that flexibility, and you may have to change your infrastructure to work with that in a certain way, right? The universal token is also is intended to be a one-to-many attribute. So with that single universal token, you can store that and reference sending the clear PAN, reference sending the associated network token, and so on and so forth. So it's all about access, simplification, ease of use, and where's the value to you as a customer.
If I could just double click on that, it's in a sense what I'm hearing from JC and Kyle is that network tokens are inherently more restricted. It's sort of a restricted channel, whether that's they're specific to the merchant that is provisioning them. So you can't just use the PAN associated with that network token anywhere you'd like with a universal token, but that network token is merchant specific, or in the case of Apple Pay, this is kind of device specific. So it's really built for a specific channel or domain in a lot of ways, which is a more controlled environment that creates more security.
And maybe to your point, Andrew, because the network tokens are specific to card payments. And that also basically relates to one of the questions we received. What about alternative payments? What about non-card payments? For instance, account to account and tokenization. Is tokenization also available for that type of payments?
Absolutely. So network tokens were tokenization is essentially a gold standard for data security in the digital economy here. Its iteration with network tokens is specific to the players in a card processing environment. So with that sort of preamble, I'd love to hand it over to JC or Kyle to talk about how tokenization is used with us here at IXOPAY for those alternative payment types.
Yeah, I can talk about that for a little bit. So with any alternative payment method or APM, something to think about is when it comes to tokenizing data, the key is IXOPAY needs to have access to this data. So for credit cards, we need to see the credit card. For A2A, we need to see the bank account number, maybe the routing number, right? We just need to see that information, and we can tokenize any data set. Now, there are some nuances when it comes to APMs. There are lots of different solutions in the world, obviously, throughout payments. When you're talking about a specific APM provided by example like SEPA Pay or some kind of APM specific to a country, a lot of those would end up being what I would say, instead of us tokenizing those directly, we'd be more of a channel for you to then use said solution. So some solutions are kind of like a locked box. So some A2A solutions, it's more of like a redirect, right? You're on a website, here comes, SEPA Pay, you get redirected to that solution, and you're putting your bank account information directly into SEPA, not IXOPAY. So in that example, we wouldn't be tokenizing it because you would just be redirected to that specific solution. Then there's another example where one of our merchants wants to create their own APM, essentially. They want to make their own application for their own ecosystem. In that case, we would directly have access to the bank account numbers. So the difference is, in one example, you're depending on a third party to communicate to the bank for you, and on the other, you're communicating to the bank yourself. When you're communicating yourself and building those rails, we would tokenize that information directly, and you would effectively make your own APM.
Mm-hmm. And I can add a little bit of color there, right? So when you think about account-to-account payments, you're bypassing the card scheme rails. Network tokenization is provisioned by the card scheme. So by default, network tokens wouldn't apply to an account-to-account payment. But as JC called out, universal tokens can. So this is where's the value to you as a merchant? What are you processing? What value do you want to obtain in your environment for your roadmap? And that's going to lead you to what KPIs you're looking for. And do you need network tokens, universal tokens, or a mix of the two?
Great, thank you. Before we move to the next questions about the cost and the benefits, I would like to take one question from the audience. If as a merchant decided to store network tokens on my own infrastructure, does it affect my PCI compliance level?
I could answer that. So the answer is no, it does not. the network token is not considered cardholder data. However, there is a nuance with a network token. You may or may not have noticed on one of the earlier slides, but a network token is actually LUN compliant. So network tokens have their own bespoke bin range created by the card brands. That means, let's just say you were having an audit and someone was to scan your network, they would see a red flag if you were storing the network token in the clear within your database. Yes, it wouldn't increase your PCI scope, but you would have to prove that it is non-sensitive and that it's not a credit card number, which may or may not be difficult. And what I would say is, since this is very related to the question, depending on a token service provider like IXOPAY would solve this, because we actually have our universal token acts as a one-to-many, to not just the credit card number, but when you want to leverage the network token, we store all those things on your behalf in a database, so you don't have to worry about this situation.
And I can tell you from personal experience of having to be the platform manager who walked the JPMC auditor through the system, and we stumbled upon a value that they thought was a credit card, and I was trying to explain to them it wasn't, and it started off with smiles and laughs. Yeah, that's not a credit card, that's a different value, but we have to prove it, and that was not an easy task to do. They definitely left no stone unturned.
Thanks, Carl. The question about cost and benefits. GC, you talked about it earlier. There is an uplift for recurring payments, subscription businesses, but also for businesses that have a lot of recurring customers. Can you dive a little bit more into sort of the costs and the benefits of network tokenization? Because it also comes with a cost, I guess. I mean, you need to implement that.
Yeah, absolutely. So I might have mentioned a little bit of this before, but we'll kind of double click into it.
Yeah.
So first and foremost, it does require a connection to the card networks. And what I will say is, for anyone who's done a little bit of research on that connection, it's a substantial lift. I believe it took IXOPAY 6 months to create this connection. So it's fairly complex. It's really not designed for a merchant as well. It's actually designed for a much, much higher volume for multiple enterprise endeavors, so it's really, on paper, it's designed for a TSP like IXOPAY. So what we did is we first connected to those APIs, so that way our merchants can come to us, connect to our API, which is far more simple. And then on behalf of them, OBTR, on behalf of token requester, we will then generate the network token using our merchants' TRIDs or token requester IDs. So in a sense, think of it as a way for you to take advantage of a network token and scale faster without having to worry about the implementation. So that's really the cost of. Oh, go ahead, Kyle. Did you have?
Yeah, well, and as you articulated the cost, I wanted to articulate the value, right? As you're piggybacking off of integrations that we've built, simplifying it for you to get to market faster and get to the value you're trying to achieve faster. This is the wave of the future. This is where the future is going. It's one of those things where you're going to want to get integrated, get into a positive working relationship with a TSP of your choice that's going to be able to enable you with all of the feature functionality that you're looking for. Network tokens is just one of them.
And is there a mandated date to implement network tokens? It's also one of the questions we received. And is this part of the scheme roadmap?
So I can start with that one. So at the current juncture, there's no mandated date. There's no mandated requirement to adopt network tokens. It's still making its way across the funnel, issuer adoption, acquire adoption, and it's different pace of adoption in different regions. The US is far more adopted with network tokens versus EU because of the regulation that's there and the mandates that are in place. US market being a capitalist market, the bigger merchants in the US wanted those incentives that are offered by the card brands. So they forced it on their acquirers, and the acquirers wanted to retain the business of their merchants. So they adopted it in issuers, and it just trickled on. So now it's robust, and it's robust beyond the point of recurring transactions. We're seeing a lot of uplift in e-commerce transactions because of the repeat purchases from a cardholder. Without a subscription, customers are going back to the same website, the same merchant, time and time again, purchasing not only the same products but different products, and that network token can be used to drive efficiency and uplifts there with authorization rates.
What percentages do you see if you talk about uplift for these recurring customers or in subscription commerce?
Off the top of my head, I'm drawing a blank, but I recall there was authorization rates were in the high 80s, low 90s in regards to network tokens. There was a big demo by Visa this past week, and they were talking about how 50% of the transactions processed through Visa are coming through as a network token, and they are on a mission to have 100% of their transactions coming through as network tokens by 2030. So this is where we're going. It's not a mandate just yet, but it is something that is going to be a requirement at some point.
And to add a little more context about those acceptance rates lists, because you've seen some PayPal publications, MasterCard, Visa talking about lifts up to 200, 300, 400 basis points. And that sounds great. The caveats there is that the availability is limited by the issuers, the acquirer functionality, the region that you're in, the coverage, as Kyle and JC have touched on, and then also the sector too. Network tokens, as JC mentioned, tend to be designed for recurring payments, which already tend to have a higher acceptance rate. If you just looked at two sample sizes of single one-off transaction with a new payment method versus a recurring known entity transaction, then the latter category will generally have higher authorization rates. So if you were doing something like utility payments, your regular electric bill or something like that, that might be a minimal lift in authorization rates, because those tend to be very secure, regular payments with a card on file, because people have done the work. They don't want to miss their utility payment and get too creative with that to risk getting the water shut off. So that might be a few basis points lift. Whereas a higher risk merchant or someone who can control for different recurring payment methods could see those significant lifts, and we do see examples of that in our customer ecosystem.
Yeah, and talking about sort of the differences across different industries, there is also a question here on whether you see higher adoption of tokenization among high-end omni-channel retail merchants, or more like luxury goods, those who don't necessarily have recurrent payment business models, but those who are looking to recognize customers across channels and across PSPs. What is the value of network tokenization there, and do you see like higher adoption among these type of merchants?
Yeah, well, it is definitely one of those things where you got to know your data and you got to identify what value you're after. And there are certain scenarios where customers or merchants see the value in leaning into the network tokenization. A lot of times it's, as JC said, it's there's certain layers of PCI compliance that you're assisted with by not allowing a card number to be stored in your system, and what the value that you get as a merchant by that. There's interchange rates. It's more so what value are you after? What are you trying to achieve than what industry you're in? From the industry that you're in, it's, do you have repeat customers? Are you a shop that's going to have someone, whether it's a subscription or not, where you're going to have a repeat buyer? If chances are that you have a repeat buyer, then there's a use case there for you to look into network tokenizations. Okay,
thanks. I would like to address the question that we had in the poll topping the ranks on the data portability. Because one of the key promises of network tokenization is seamless portability across platforms and networks. But how can merchants achieve this portability?
Yeah, I can address that. So when network tokens were first talked about by the card brands. That was the whole purpose. And that was all started from the EMVCo spec. They created a spec, and the purpose was that this would sort of act like how we think of a universal token, but it turned out that it's a little bit different than that, right? It's really the universal part from a network token perspective is really about after the merchant, right? It doesn't really solve the situations and issues that merchants have to deal with, like I said, reducing PCI scope. So, in able to be portable, you would still want to rely on someone whose business model is to also make a merchant agnostic and portable themselves. So it really does always come down to the business model of who you're talking to. So if you were talking to a gateway, they probably wouldn't be as portable because a gateway make their money on keeping you within their rails, flowing your volume. They can create a network token for you, and they can create your network token using your TRID. However, typically, in my experience, most of those network tokens are not given to the merchant directly. Usually they're given an ID, and that identifier is so they can make sure you keep your network tokens in their ecosystem. So now we come back to, well, the brands, the idea was that it would be able to go across PSPs. Well, that's where someone like IXOPAY comes into play, since our business model is to enable a merchant to really take hold of their payment strategy, whether it's the credit card number that they're sending or the network token. We allow that. So that's the difference between what we're trying to do is we would also create your network token. We would also store it on your behalf, because we talked about the potential debacle earlier of storing a network token in the clear. Even though it's non-sensitive, you didn't have to prove it, which could be pretty difficult. We're solving that, right? We basically act as a translator, right? You tell us, we're the custodian. Where do you want? What do you want to do? You want to make the network token? Okay, now what would you like to do? Would you like to send it somewhere? And so we act as a proxy between all of our merchants and their PSPs that they'd like to do business with. And so that's how they're portable. And it really comes down to the business model that you're currently in partnership with, and whether or not they're going to allow that.
Absolutely. Right. Just to double click on the comment I made earlier, you got to keep in mind that just like you're in business and you have customers and you're looking for ways to maintain stickiness with your customers and be able to keep them with an active relationship with you over time, your PSPs are looking to do the same thing. IXOPAY is looking to do the same thing. So the ball is in your court on you identifying your value. Are you the value that you're looking for? Are you a seasonal merchant? Well, you're probably not a multi PSP setup, and you're probably fine getting your network tokens from your PSP. Are you a bigger merchant, cross-border merchant? You're almost definitely a multi-processor setup. Now you need to look in, well, how much of your own destiny do you want to own? The more that you put your destiny into the hands of your PSP, the more you're locked in, the more you're stuck with that PSP. So if you get an opportunity with a better interchange rate, a better value, that's better decision for your business to shift your PSPs, now you need their permission to repurpose all that transaction flow to the other one. The TSP, like us here at IXOPAY, that's where we live. We live in giving you ownership of your own destiny, of your own data. Everything that we give you by nature is portable across, because we want you to be that cross-border, continuously growing merchant.
And to make that specific to this, that PSP that's been your primary, and you're excited about what you've heard on today's webinar, you may give them a call after this and find out that they don't support third-party network tokens for transacting if you're excited to work with them. So that, again, could be the catalyst for starting to explore some different connections.
Yeah, thank you. For network tokens to work across the ecosystem, I mean, every actor needs to be ready. Issuers, acquirers. There were some questions as well in the Q&A. What is the current readiness of acquirers and issuers, and does this differ per region?
Yes, this definitely differs per region. Going back to the comment about adoption in the US versus adoption in the EU, where there's just different circumstances, different forces driving the adoption. Now, as stated, for network tokenization to work, the merchant, the acquirer, the issuer, everyone must be a player on that rail. So the best way to identify if the rails that you're processing on are eligible is a combination of two things. One, check with your acquirer. They're going to have the information on who's participating and who's not. Number two, get a really healthy bin data file. The right bin data file will help you identify who's participating, who's not participating. And then if you benchmark that against your transaction data, you should be able to analyze to determine how much uplift you can get specifically by network tokenization. And that's the part that I want to hone in on. Like, I want to move away from industry generalizations, and let's talk about each of you individually. It's important for you to know your specific data, because my data is different from JC's, it's different from Andrew's. So what does your data look like? Learn that bin data file, be an expert of how your data translates from that bin data file, and then place your bet. If I as a merchant have this much coverage and I go to network tokenization, I expect to see this impact to my interchange rate. I expect to see this impact to my authorization uplift. This is the building blocks of that prior question of identifying the KPIs.
Yeah.
And just to define a term, so by a good bin data file, that could be a really quick question with whoever might be providing it. How often are your bin tables updated? Can you walk me through, how you source that data? Just elements like that. So if anyone was curious about what makes a good bin data file versus a substandard one.
Yeah, great comment. But there's also one of the questions from the audience, like, what are the main challenges for merchants, but also specifically for acquirers that lead to low tokenization adoption rates? Because, you rely on your PSP acquirer, whether they are offering this. And what is the challenge for them if they're not ready yet?
Well, it depends on the market, right? If you're in the EU market, you're heavily invested in 3D Secure, and you have tools in place that are doing similar value adds in that payment landscape. So network tokenization isn't big on their radar, and it's not widely adopted because it's not regulated in that EU market. An EU market is typically a top-down approach to getting something generally available, versus on the US side, where it's a merchant-driven capitalist market. The businesses are going to want the value that they get in there, and they're going to be able to push their weight around if they're a big enough merchant and force acquirers and issuers to put this on their roadmap and adopt. So it's really the characteristics of the market. In the US, we will get there first because of the incentives that the merchants want to have. The US will likely be fully network tokenization before EU does, and EU will likely catch up and close the gap quickly once regulation comes into place.
Yeah, thanks. Another question from the audience. Any suggestions how to best combine using account updater and network tokens? So how is that different? How can you combine these two? I see you smiling, Kyle. Would you like to go first?
Sure. I'm positive that both me and JC have some thoughts to share here. Mm-hmm. So one of the big values of network tokenization is it's managed by the card brand. And because it's managed by the card brand, it has auto updates inherently baked in, right? So as the PAN changes, as the PAN expires, as these break in processing moments happen, the network token auto updates and keeps processing going. Hence, it has a higher authorization rate. Now, we're also talking about network tokenization not being adopted at every juncture in this payment landscape. So that means that there are breaks in that. And if that card is not eligible to be on the network tokenization rails and it's on that financial PAN rail, well, to continue processing in a change event, you're going to need a service like Card Account Updater that is going to allow you to update that PAN, update the expiration date, and continue processing. So until we get to a point where there's full 100% adoption of network tokenization everywhere, you're going to want to leverage a card account updater, especially in subscription-based models.
And one more niche use case to maybe talk about. It may not match a lot of merchants, it might, so that's why I thought I would mention it. I did have a merchant who had an agreement with all of his merchants. He was an aggregator of merchants essentially, and sold his rails for memberships. And part of the agreement was if you wanted to leave his, his services, then you would be given the credit card number so you could go on to another provider, right? So think about getting access and going somewhere else with your data. Well, if you're using a network token, that can kind of make it more complicated, because when you make a network token, you use a credit card number to get the network token, but you cannot decrypt a network token to then get the PAN. So at no point will a merchant ever be able to get back to the PAN if it changed on the behind the scenes. Since the network token has card account updater built in, you're not going to be able to access the original credit card number. So if you ever run into those types of use cases, you would need a traditional card account updater solution using the PAN to satisfy those agreements. Whether or not that applies to a lot of merchants, I'm not sure, but I just thought I would mention it since I came across it a few times.
And yes, that is one of the big use cases that would be a dual usage of universal token and network tokenization.
Mm-hmm.
That universal token would be referencing that clear PAN and be on that card account updater rail, and it would be able to reference that network tokenization rail, and you'd have a simplified approach, but you still have full access to the PAN if you need it.
Great, thank you, Kyle. Another question about the portability. In case a PSP acquirer supports network tokens and they are also requested by IXOPAY, for instance, on the merchant behalf, is this network token portable amongst all the different PSP acquirers the merchants might work with, or do the acquirer PSP have to be able to accept portability?
So I can answer that. Technically, they need to be able to accept the portability. But what I would say is I don't have a percentage, but it would probably be in the 90th percentile that a gateway would accept those. So the first thing that I would look into, it requires a little bit of research, is find out first, does the gateway offer network tokenization themselves? If yes, there's a pretty good chance they also accept third party. However, there are a couple known very large service providers that lock this out. And the reason being, it's a business strategy to keep you within their ecosystem. So that does exist. There are some PSPs that do not allow a third-party tokenization or 3DS. That's typically the pattern you're going to see. It'll be for both of those technology stacks. For both 3DS and network tokens, you have to use theirs. The amount is very, very small of those PSPs, and it should be pretty easy to track down which ones don't allow it.
Thank you, GC. Does tokenization limit the option of routing through local scheme, such as cartes bancaires, I think, like in France?
If you're referring to universal tokenization, no. Universal tokenization is intended to be cross-border, cross-PSP, cross-acquire, referencing the financial PAN and being able to send that financial PAN wherever it needs to go. The network tokenization, merchant-specific PAN, that's something that has limitations, as Andrew has brought up, and that rail that you're referencing would need to support that network tokenization model.
Okay, thanks. Does the use of network tokens typically give a merchant a reduction in interchange or not? Or would this be an offer by the PSP to get our business?
It would be from Visa directly offers an interchange shift of 10 basis points currently. And so I would stay aware of your surroundings and research in the future to see if any other card brands also offer those. But for now, Visa offers a 10 basis points shift.
Thanks.
With a few exceptions, and then a small, that also depends on geographically too. There's Visa is offering this sort of carrot approach in North America, and then I think in mid 2023 offered a very small penalty for merchant initiated transactions that are not submitted with a 3DS check, a digital wallet, which can be a different form of network token, or submitted with a network token. That's specific to merchant initiated transactions on Visa in Europe. So just like everything in payments, lots of little wrinkles and nuances to check out.
Thank you, Andrew. Are the issuers the ones who have to be certified in these network tokens? And are your tokens COF or MDS? I don't know the abbreviations, but are your tokens, so IXOPAY, COF/MDES?
I'm assuming MDES is what they're referring to, which is MasterCard's network tokenization solution. And no, we don't use MDES. We actually went with Visa. So we use Visa's, and Visa's network tokenization solution supports Visa, MasterCard, and American Express. So you don't actually have to get separate network tokenization providers. You kind of choose one. So
great, thank you. Since network tokenization is LUN compliant, does it fall into PCI scope? If not, how do we notate that for auditing?
You want to take that one, Jesse?
Yeah, so the answer is no, it does not count as a PCI scope. It doesn't increase your scope. The problem is a logistics issue of how do you now prove that it's not a credit card number since it's LUN compliant and passes a mod 10 check. I'm not sure on the answer on how you would go about that. I think what I would do is I would first show, if you're using a provider, show that attestation of compliance and that you're using them to generate these network tokens first and foremost. Then next would be probably a network diagram. And, as far as giving advice, I give advice all the time about PCI scope, network tokenization implementations, all the time. So essentially what I normally do is I just try to prove to the QSA and show them our API endpoints, how we're verifying our customer, and they look at our AOC and then they put 2 and 2 together and know that it is indeed a network token. However, I don't run into this exact scenario just yet because I haven't had too many people store it in the clear, because our services allow people to get network tokens without storing it in the clear. They don't have to. They just store our universal token, which would not show up on a scan.
Correct. So in my past world, when I had to do this audit, it had to support the audit flow. On one hand, we knew that we needed to have clear identifiers to identify what the value was, and on the other hand, we had to prove where that value came from and how we got it. That's a short way of saying. That's a paraphrase way of saying what happened, right? Is we had to show them where we got it from, and that can be easy or very difficult depending on your setup and your circumstances.
Thanks, Kyle. So how do the card schemes plan to tackle the time lag of generating a cryptogram for a first-time sale versus a recurring transaction? You mentioned Visa are moving to 100% network tokenization, but until this is resolved, they cannot push network tokenization onto one-time, first-time sales. Who would like to go first?
You got any thoughts on that one, JC?
Yeah, I do. I just didn't want to take up too much of everything, make sure everyone has plenty of time. So what I can tell you, so what I will say is I don't know what Visa's plan is specifically, but what I will say is I can kind of describe what this person is referencing, which is it takes a little bit of time to generate the network token. It can take 2 seconds, sometimes 3 on the longer side, but I would say 1 to 2 is pretty common. So if you're sitting at a checkout, you may not want to add that amount of latency, which is the concern this prospect's bringing up. What I would say is this is business dependent or specific, business model specific. Some business models this wouldn't affect because maybe they're still filling out the form, therefore it wouldn't increase latency for the cardholder. For those that it would, I would expect when Visa says they expect 100% of traffic, I don't think they're talking about authorizations. I think they're really just talking about recurring transactions and recurring clients that they'd like to see 100% of the flow. I could be wrong, but until they solve the issue of provisioning the network token for the first time, of getting it sub-second, I don't see that happening unless some kind of mandate is then, of course, forced on all merchants. So until one of those happens, I have a feeling it's really just going to be targeted for the returning customer if it's a one-off transaction or a recurring transaction.
Yeah,
and just to break, oh, sorry, one more thing I thought I should have broke down. There's also the sense of a cryptogram that we haven't really talked about. The cryptogram, in short, is sub-second. The network token provisioning is what takes longer. So if you already have the network token, you don't need to worry about, oh, I've got this authorization I have to do for a returning customer. Well, if you already have the network token, there's not going to be any latency because the cryptogram, which will be needed for any client-initiated transaction, is sub-second. So I just thought I would mention that in case someone also had a question about latency with that. Go ahead, Kyle, sorry.
And it might call about a change in experience in the checkout flow. Again, this is model specific, right? So when you're, a lot of times when you're collecting card information, sometimes you input the card number first and then your name. Other times you put your name first and then the card. Well, depending on that flow, if you have it set up right, you can sectionalize your intake for that payment information by having your card information first. And once you click out of that, initiate the network tokenization retrieval while the rest of that form is being filled to try to streamline that payment checkout flow. So there might be a scenario where merchants need to get creative to avoid the delay or the performance lag in the customer experience. And we're at the precipice of that. We're at the beginning stages of what is the best practice, and we're trying to define those as we go.
Well, thank you, Kyle. And guys, you asked for questions. We have tons of questions. So I'm going to address maybe one of the last questions, and we will address the others that we don't have time to include in this session. We'll definitely reach out to you. The question is, what is the best way to keep a PAN and a network token associated? For example, showing the last 4 digits to the customer for them to identify the card. What is the best practice here?
So I'll give you 2 different scenarios. One scenario where you're using someone like IXOPAY, and one when maybe you're not. So if you're not using IXOPAY, it would be more difficult, and I would think you would need to account for that within your database to store the network token within the customer profile. Otherwise, I don't see how you would keep track of it, because the only relation that you might have to a token, again, this actually doesn't necessarily work, because if you're using a universal token, if it's not IXOPAY's, then the look of that token may not be how I'm expecting. See, at IXOPAY, we maintain the first 6 and the last 4. So you'd be able to tie the first 6 of the network token to the first 6 of the universal. Your universal token, if you're not using us, might not do that. So therefore, you may not have an identifier. I'm not sure. However, if any of the data is maintained in your universal token, and it's the very first of the card, then you would be able to tie them together there, because the first of the network token is also the card, but not the last 4. That's the distinguishing factor. If you're using IXOPAY, none of this is required, because we actually tie this in our database in the back end. This is basically a black box from the merchant's perspective. All they have to do is tell us when they want to provision a network token on behalf of a PAN. We do that. We actually tie the network token behind the scenes in a database table that we maintain that's tied to your universal token. So all you have to do from your perspective is say, yes, I would like a network token. And then when you go to transact, you say, yes, please send the network token and not the PAN. And we do that on the fly behind the scenes, so you don't have to worry about the logistics.
100%, JC. And to end it off, that's where that use case of marrying network tokenization and universal tokenization comes into play. Do you want simplification in your processing? Do you want flexibility? Do you want to be able to grow and use the newer tools released in the market without having to change your infrastructure? Because that universal token can be customized to fit whatever your current scheme is, your scheme needs are, so you don't have to invest in re-architecting your reporting. Like, that's one of the big value adds. So flexibility, performance, simplification. That's where IXOPAY TSP comes in to give you all-in-one access.
Okay, we're
I'll
really...
just to that. I know we're right at time, but with that could also be a cool instance of using card art, which is one of the associated benefits of a network token. You know, obviously you can work around it too, but from the customer experience, that's when they can see their card right at checkout and gives them some warm and fuzzies. And also with a par value, there's so many things we didn't touch on today, but a lot of little quality of life additions that come part and parcel with the network token too. But we'll have to save that for our third, fourth, and fifth network tokens webinar.
For sure, for the Q&A sessions. Thank you so much, JC, Kyle, and Andrew, for taking all these questions. There's many questions that we did not have time to address, so maybe indeed there will be a next one. But also, thank you so much for the audience. We asked for questions, we received the questions. I mean, really, and all great questions. So again, the questions that we did not have time to include in this webinar, the IXOPAY team will reach out to you and answer these questions in writing. We really appreciate your engagement during this webinar, and it also confirmed the fact that yes, there is a need for more explanation, for a deeper dive into this pretty complex topic. So thanks for now. We will send you a link to the webcast, and I hope to see you in another webinar. Thank you. Bye-bye.